Good morning, the COT data video for the week beginning the 10th of March 2025. Quickly look at the comms, not the non-comms. Remember, the non-comms are the banks and institutions like whales, basically, like big fish. The comms are the opposite of those guys. They'd sold the euro crosses quite heavily, and you can see the big fish, the big boys with the big pockets, they bought the euro. So obviously they run in parallel, but in an inverse correlation, as you can see, because these guys have to take the slack off the big fish, and when these guys will read news events and they'll offload positions onto these guys, and then they're going to have that drawdown, and they're going to get pretty much wiped out. And then so that's how it works. There's an inverse correlation. Pretty much when we look at retail sentiment, we know there has to be someone to take the other side of that transaction, of course, because if there's 100 million people short in the euro, there has to be some entity that takes the other side of that trade, right? So it's always like a duality, like a yin yang in trading. And also we have to remember like things like the Pareto principle as well, where there's going to be, it's like the statistics and mathematics involved, and we see like an offloading of positions onto the comms, and when they've wiped out, then the non-comms will pick up the pieces and then they'll buy, and it's like supply demand dynamics as well. Just a quick look at that, just so you know what they're doing with the euro. Ned sold it, and of course you saw the euro price this week, and it was going completely bananas. So let's create a new chart, new sheet. We'll call it net non-comms, because we can look at the non-comms, but we look at the net non-comms because it gives us a clearer picture. Net non-comms. There you go. And as like I said, the euro's pumped a lot, and we may get the euro USD buy, which would be really interesting because it looks like it's overstretched already, but it may continue further by the looks of this, because we could get a crossover. If we get a crossover, we're going to probably pump. See the reaction on the euro USD pair when we had the crossover to the downside. It really fell, and it looked like we were going to parity, didn't it? And of course, at that point, the comms, the small fish, they decided to get involved, and they took the bait and they took the trap. And don't forget, we can see the trap being formed on the order book as well. So definitely get a copy of the FX as the SI indicators, and then have a trading view integration as well. I'll need to do a video on that, which I'll do this week, because it's really cool. And we can look at indices as well. We can see where the stops are on the NASDAQ, which is pretty amazing. So that's the euro, and the dollar has ticked down slightly, ever so slightly. It's stable, and it's not really doing that much, but it has ticked down slightly, but the euro has pumped. Let's look at the yen. And this is the first time I've seen this, and we are still going for it, very strong. A few weeks ago, I was saying we were compressing, we were like coiling up for a reaction. You can see this W pattern. It looked like it had been squished, and so by squishing it, it looked like it had projected propelled price higher, and you can see that there's a lot of interest in the yen right now from the big fish. A crazy amount. We're 133,000 contracts long, so be careful with the yen. Okay, it is strong from a non-comms perspective. We've come off 182 minus plus 133,000. It's a huge difference there. So be really careful, okay? Euro off, Aussie on. And how we were looking, oh, it just ticked slightly down. So there isn't anything to be said there. It looked like they haven't really decided what they want to do yet with the Aussie. We are negative, and it looks like we just ticked down slightly, so it sort of reinforces like a bearish bias on that, although it hasn't really done much. Really, it's just pretty much gone sideways. Aussie off, pound on. And that has ticked higher, and we had those supports, if you remember my videos from a few weeks ago. I was saying this may have held, and it has, and we've got actually got the buy signal for pound USD on the cable rate. Okay, so just so you're aware of that, it's actually going to be quite bullish for that particular currency pair. All right, because we've got the crossover that the banks, they're more bullish on the pound than they are on the USD. Okay, so don't forget, don't just blindly enter because based on this, because we may need to retrace. If you look at the pound USD chart, you know, we're definitely trending higher, but we may want to get a retracement to get the SLC first. Okay, so we may see this a 50 pip drop to get the stop loss cluster for the next move higher. So don't necessarily enter as soon as the market opens, buy at the SLC below. Okay, it's a quite important thing. You want to wait for the retracements in order to get a better risk to reward and to get a better entry as well. So that's that. Pound off, CAD on. CAD's been under a lot of pressure because of the tariffs, and there's a lot of noise this week as well. Minus 137 to minus 143,000. So quite bearish. But we have got that low. So pending that low holds, it's not completely game over for the CAD. It is quite heavy though, okay? And this is going to be tracking oil. And don't forget, Trump wants to drill, you know, get US oil out the ground. And of course, by doing so, it's going to mean less attractiveness for, you know, the Canadian oil. And so it's fundamentally quite heavy, to be honest, and we can see from the non-coms it's quite heavy as well. Okay, so keep an eye on that oil. If it carries on falling, it's probably going to it's going to hurt the CAD, and we may continue lower. Okay, and it is what it is. It's just that Trump doesn't want to. He wants to drill for gas and oil in the States, which makes sense. You know, it makes complete sense, doesn't it? It's financial. Sensible. So gold has ticked lower, still really strong. Don't forget, we're still very, very strong. We're massively above the zero, but we are tumbling a little bit. 261 to 243. So, you know, we are descending, and I don't know where we'll come down to. We could come down to this level here, where we had like a triple top. We had like this fake. I made a breakout, and we can see, you know, we can see probably it may come down to here, and so we could see a little bit of a selling off on gold to come down to support potentially. Okay, and don't forget the Twitter's getting quite bullish on gold as well, because they're all calling for 3,000 and beyond. Now, if everyone thinks that, it won't happen. So gold off, and peso, I guess we could look at. And it was strong. No, it's just ticked slightly lower. We're looking at this because of the tariffs, okay? And there's going to be some agreement, some financial agreement over the course of the week between the president of Mexico and Trump, and they're going to come to some agreement, and it's probably going to benefit both economies, to be honest with you. And Trump's playing hardball, which is understandable. So that's we may see both. We may see the dollar tick slightly higher. We may see the peso tick higher as well. But what is interesting is that euro pump, and also that yen as well, which is really bonkers. And that's the strongest we've seen it since we've been looking at the COT data. And that's been a long time now. So peso off, New Zealand dollar on. And we may be breaking 54. And 55, yeah, we have broken that low. So maybe a little bit of concern there if you're long on the Kiwi. They are shorting it, and we have broken that low. We can see things like the euro New Zealand dollar, the pound New Zealand dollar, they've really, really, really pumped. The pound Kiwi didn't look back. We had 7 days plus of complete bullishness. Without any pullback at all. And I know this because I was testing the new bot using the pound Kiwi, and it was caught off guard. It was caught offside on that particular currency pair, and it incurred a lot of losses. However, conversely, had it a caught it on the long, it would have been phenomenal. So we are looking at the 2.0 logic over this weekend. I've got a test plan that's in Discord, so it's worth checking that out. I'm running 3 parallel tests simultaneously, and we're going to look at the risk multiples, and we're going to look at the risk to reward, and we're going to look at the method as well, and really primarily concerned with the TPSL, because that's the key for the profit and mitigating losses. Without the risk to reward and the risk management, we won't have a successful bot. So we need to fine tune that over the course of the coming weeks, okay? And so we'll have to see how we go, but with any luck, it does capture some really good trades. And the only downside with the risk multiples is that we have a fixed TP and a fixed SL. So we have like a massive move. It'll capture it, but then it may continue higher. That's the trouble. So there's lots of testing to be done, and I'll report back. I'll be making videos on the 2.0 logic anyway, so you can keep up to date by checking the YouTube. And so the daily bulletin videos go in Patreon, but any testing videos and the COT videos will go to YouTube, okay? And New Zealand dollar off, and we'll look at the Swiss franc, and that will be it. And we are just sideways. So that's the COT data video. Don't forget, in Discord, we've got this webhook for bank forecast analysis. Read that. This is a really good article if you've got any USD exposure, and that will keep you on the right side on a macro fundamental perspective. So that's it. And any questions, let me know. You're welcome to join us at patreon.com/QuasiDB. There's no limitation at all. You just come along and you can join us and then see what you think. And then you can cancel at any time as well. So I wish you a good weekend, and I'll speak to you guys soon.